And welcome back to America's Retirement Headquarters, home of the Retirement Guys Formula and America's Medicare Associates with Nolan Baker and Scott Kerschner. 419-794-3030 is the phone number. The website, arhq.com. Don't forget, if you missed the first half of the show, previous editions of the show, topics that you want to catch up on, all available via podcast, on YouTube, wherever you consume your media. Just search for America's Retirement Headquarters. It's all there for you to check out at your leisure. Now, one of the big concerns about growing older is whether or not we're going to need long-term care at some point. Guys, I saw an article listing the pros and cons of buying long-term care insurance, but it didn't really answer the question for me. So how do you help clients that worry about the risk of needing long-term care?
That's a big one, actually. Long-term care is something that is not covered by any Medicare policy. So if you're concerned about what kind of costs you're going to incur if you need to go to a long-term care facility, and will your Medicare pay for it? Now, the answer is flat out no. I mean, there is no coverage for long-term care. You know, a lot of people, you'll see your Medicare policies, and a lot of people get a little confused about home health care. And they say, well, isn't that covered? Well, home health care on a Medicare policy is covered. If you're in a hospital, you go home, you do get some home health care. But that is not long-term care insurance. And, I was going through this pros and cons list, and these are great points for a lot of people to think about and understand. But, Nolan, we've been in the business 30 years now, and the policies today are so much different than the policies of old. And they're totally, some of these pros and cons can kind of be rebutted a little bit because they don't really apply if you have the right plan in place. Would you not agree?
I would, and I would say that's one of the questions that I ask every single client that comes in is, what is your plan to protect your assets if you needed some type of long-term medical care? And to me, I think the overwhelming majority of people don't have plans in place. Now, right. There's probably a couple people that are listening that have long-term care insurance or some other solution. So that's fantastic if you do. I know the people that have been coming to the office that have traditional long-term care insurance, the biggest concern that they have is they keep getting these premium notice increases.
Yep, exactly.
And, continue to get more and more and more expensive for paying for traditional long-term care insurance. And if you have traditional long-term care insurance and if you qualify and need the benefits, I think it's like car or homeowners insurance. It's like, thank goodness you have it.
Exactly.
But it's very possible that you could pay for that insurance for your entire lifetime and simply sail off into the sunset one day and never need it. I had some folks that I met with that I asked them that question. It was, in our first meeting getting together. I said, well, tell me a little bit about what's your plan to protect your assets from long-term care. And they said, well, we got a quote for long-term care insurance, and it was $800 a month, and we simply decided we couldn't afford that. And, $800 a month absolutely is a lot of money when you add it up. But when you add up on the flip end of the scale, a nursing home can cost, $10,000 to $15,000 a month.
Absolutely.
If somebody needs the care, that's why that insurance has gotten so much more expensive. But here's really what it kind of boils down to. Number one is you could do self-funding. So some individuals choose to just self-fund their own long-term care needs by their own personal savings. Mm-hmm. If you're going to do that, though, what I would suggest is that you listen to some of these other solutions on how to leverage your assets. So number two is, as you talked about, some of the hybrid insurance products that are out in the marketplace today have really come a long way.
Sure.
In the life insurance policies, what you can do is you can have some of these policies that include critical or chronic illness riders on it. And those benefits, they would allow you to accelerate a portion of your face value of your death benefit while you're alive if you had critical and chronic illness. Mm-hmm. And so those are the type of policies I think that you're talking to more people about.
Oh, absolutely. One of the big things is, people pay for all of this coverage for long-term care, the old policies. And I ran into a lady at an event that I went to here a couple of weeks ago, and she came up to me and asked me about long-term care. And she says, well, one of the problems I have with long-term care is, what happens if I never go in? And you mentioned that earlier, but what if I go into a long-term care facility and I only live, 6 months to a year? I pay all of this premium, and then what happens? So I talked to her a little bit about the hybrid plan and looking at a life insurance policy with a long-term care rider or a critical illness rider attached to it. And the nice thing about those policies are you can actually utilize a portion of that death benefit if you go in for 6 months and you end up using, let's say you have a $200,000 life insurance policy and you use 50,000 of that, your beneficiaries are going to reap the benefits of that death benefits that's left. So those are really, really nice. The hybrid policies, it's not you either use it or you lose whatever you paid. You actually can get some other coverages with these new hybrid policies.
I know on the show you've also been a pretty big proponent of a health savings account.
Absolutely.
That's
yeah.
just another great option.
Health savings accounts are awesome, especially with the interest rates to where they're at, and you can get a really good return on your investments. So a health savings account is actually money that you would contribute into a qualified account. It can be used for any medically approved benefit, which is including long-term care benefits as well. So that's a way to take advantage of some tax credits, lower your reportable taxable income, save on some taxes, and get some of that benefits of that money.
The fourth option is that some of these annuities now have long-term care riders on them. So there's some advanced design products, and this is really good if you're in your 60s and you're thinking, well, what if I need this down the road in 15 or 20 years from now? What happens is you deposited a portion of money, and these annuities offer some additional long-term care chronic illness riders based upon, again, your inability to perform your activities of daily living. They can double the value to cover expenses. They could double your income payment. They all work a little bit different. Again, it's a matter of understanding how it works. And some of those annuities also offer what's called an enhanced death benefit payout too. So again, unlike traditional use it or lose it insurance, if somebody doesn't need the long-term care, they've got the full account value or the enhanced death benefit, again, with the annuities with the long-term care riders. Number 5 is looking at Medicaid planning. And, for, individuals that's looking at Medicaid planning, we usually think about Medicaid and we think about people that are broke. But essentially what Medicaid says is, they want you to spend down your assets until a certain level. Again, it's a little bit different for a married couple than it is for an individual. But you have to spend down those assets to pay for it before Medicaid would kick in and cover the bill. Where Medicaid planning can be beneficial, at least in my experience that I've seen, is for folks that are maybe farmers. If you have a big farm ground, maybe if somebody that has a secondary house. I met with some folks and they have a lake property up north. They are kind of getting older, and long-term care insurance is probably not something affordable at this point. The kids and grandkids are now using the lake property. They want the lake property to stay in their family for generations to come. So working with an attorney and looking at legal steps to protect the lake property, for Medicaid spend down to get the 5-year clock ticking, that could be a legal option for Medicare planning. I have other situations where you look at family caregiving. Families today still really take care of each other. I know it gets to be more difficult, but there are situations where, people have said to me, hey, my daughter's a nurse. And she said, if anything ever happens to me, Mom, I'll come over and I'll move in and I'll take care of you. And I think that's fantastic. I guess, you have to balance the fact that the daughter has a life of her own. She might have kids in gymnastics or school.
Absolutely.
I think it's wonderful that she's going to help out. So, maybe there's a way to incorporate that into the plan. But, what happens if she needs more care than what the daughter could provide? And number 7 would be veterans benefits. So, those of you who are veterans or spouses may be eligible for long-term care through the U.S. Department of Veteran Affairs. Those could cover, the cost of home care, assisted living, nursing home care. You've got to qualify. If you're not familiar with what your veteran entitlements are, talk to the Veteran Service Organization here in town, Lucas County Veteran Service Organization, a wonderful organization that does a lot for us with our veterans that we work with at our organization called Hooves. But there are many things that you can do. A lot of the times, we don't like to think about getting old. We don't like to think about, slowing down. We certainly don't like to think about nursing homes. But, the faster you address this in your situation, the more options that you're going to have available. There's definitely pros and cons of long-term care insurance, but if you have a conversation with Scott and I, what we can do is we can talk to you about how to protect your assets from a long-term care spend down without buying traditional long-term care insurance. Again, walk you through all these other 7 options so you know what your choices are. And the sooner that you do it, the more that you can leverage your existing assets to get you more benefits in the long run.
One thing I'll add, I know we're coming up to a break here, but I want to add real quick, if the sooner you address this issue, you get to pick and choose what kind of care you can get. And if you put this off and then all of a sudden you're thrown into a situation where you have to utilize some sort of a long-term care facility, you may not be capable of deciding, and if it is a Medicaid situation, you're at the mercy of whatever facility they're going to put you in. You don't get to pick that facility, So, and one last thing is, yes, don't just assume that your family or your children are going to be able to take care of you. I know you mentioned that, Nolan, but recognizing this and seeing this firsthand, it's not nearly as easy as one might think. So you want to prepare for this sooner than later.
There are certain insurances that we all have: health insurance, auto insurance, house insurance, things that are required, legally are obligated to own, to have in our possession. And while it is not the law of the land, there are certain states out there that are trying to make long-term care insurance a mandatory thing to have on you. That is not to say that you shouldn't consider it. That is also not to say you shouldn't have that black and white long-term care policy, the use it or lose it policies. There are options out there, and you should definitely take into consideration the possibility or even probability of needing some form of long-term care assistance over the course of your retirement. The team at America's Retirement Headquarters, Scott Kerschner, Nolan Baker, the entire team can help weigh those options for you, figure out what's going to work best for you in your retirement. But it all starts with that phone call, 419-794-3030, or visiting them on the website and scheduling a time there as well, arhq.com.